Back to the charts. We're going to start by having a general look at what happened on Friday and how the levels kept. Then we're going to look at the DXY and the S&P, where are they today, and we're going to look at the calendar and see what's going to come in the news today and this week and what we should be mindful of. Now, it's the same overall. We are looking at the same levels, and we have the big question in mind is: are we going for a deeper correction, or have we corrected enough to do another leg up? That is the big question, and we're going to look at the two directions and what is the confirmation and the validation for both. We've done the basic mapping out of the levels and the support and resistance trend lines, and now what we need to see is where is the bigger, higher probability direction in, or what is the bigger, higher probability direction. I think that's more correct. So today we have only had the CPI for the Swiss franc, and it was quite positive, a little bit over what they expected. Now we only have the factory orders today, which is not a red flag or an orange flag, so not medium or high impact. We have the Fed Chair Powell testifies tomorrow, 3 p.m. UK time, and it is the semi-annual monetary policy report before the Senate Banking Committee. So I believe what we're going to see today is a range before this comes out tomorrow. 3 p.m. UK time, and then we have the then we don't have too much news coming out, but that as in on the US part. Now on Wednesday, again, we have the same thing, 3 p.m. UK time, but we also have the job openings. It's always hard for me to say it, which is, again, it's a key indicator of overall employment. Now, they have said that the recession or the inflation is not employment related. So again, it may or may not affect what's happening, but it is gonna be quite relevant what's happening this week. It is going to be connected to what Powell will say as well, because it will bring either certainty or uncertainty in the market, and you know that the moves are connected to how the market feels, the market sentiment, and sometimes even if the news is bad, because the market is expecting it, the market will continue to lift, because again it's the feeling of certainty that lifts the market rather than uncertainty. So what Powell will say and what the job openings will be, if it is along the lines of what the market expects, which is mainly let's say a stagnation, a leveling out, because again the Fed rates are expected to either be 25 basis points or 0.5 basis points, which is what they've been so far. Again, that would be, how can I say, that would be along the lines of what is expected. Now on Friday we have Fridays are generally big news days, and the market makers might use the news just to make the market move in different directions. So and it's also the run for money before the week closes. And if it is, for instance, as we're going to have the 31st of March, the end of the month, that I anticipate that to be quite a volatile Friday. So at the moment, what we have is on Friday we have the average hourly earnings, the non-farm employment, and the unemployment rate. Now, because of what the Fed have said previously, how it's not the the job market that's causing the inflation. I believe that we're going to have a more moderate response to these news than usual. But we still need to see it, and we still need to watch our levels. Now here, so the news this week is more mainly about the job market, but the main days to watch are Tuesday and Wednesday, when we're going to have Powell speaking. Powell speaking is either going to stabilize or destabilize the market. And if it destabilizes the market, if he's going to say something that he hasn't said before, and if it's something that the market isn't expecting, it will drop significantly. That's what generally happens. Now, for the DXY this morning, I'm looking at this because the index is open. We've had another attempt at the 200 EMA on the daily, and by the looks of it, this has all happened with this 2, 4, 6, 7. So we've had a 7-day consolidation here with the stochastic coming down. So even though momentum dropped, price actually stayed mainly the same, trying to zigzag up and down, trying to basically break the 200. Now, breaking the 200 is quite significant. We've had since the 200 was broken here, we've had 1, 2, 3. This is the 4th back test, and we are seeing price action staying up here. So chances are this is going to break it, and if it's going to break it, it's going to break through this purple box, which is a level box, up to the next level box. So I am quite curious to see what this is going to bring. Now, if it gets rejected here, however, it's going to drop down to the 800 EMA. So we need to see how today and tomorrow are going to behave, and I would extend this period. I know it's a test of patience, but considering Powell speaking both on Tuesday and Wednesday, I think Thursday is when we're going to have a little bit of a balancing moment of where what he says it has been absorbed into the market, considering again that the market is waiting for some information on their part. For the S&P, we've had a nice lift both Thursday and Friday. Friday close on a lifting stochastic back above the 200 EMA. So this is what I was telling you about the DXY. The 50 is lifting back up. The 5 is coming with support. So it looks super. It is looking super to attack again the yellow line here, which is a strong support and resistance. And I know that TA analysts are how can I say, we're called TA artists because the lines seem more imaginary than real, but look at how well they're met, and look at how essential these moves are on such a daily support and resistance line. So whether it is or it isn't imaginary, that doesn't really matter. What matters is that it actually showed moves in the market. The trickier times are times like so here and here, and I would say here as well, where we're ranging sideways, and ranging sideways can go both ways, because it can be both a topping out for a drop down or a bottoming out, holding support for another lift. So that's why it's tricky to read ranging markets. Okay, so now what we have for the S&P is a nice support today. So we're likely to start to the upside today, but where we're gonna get is essential, because if we're gonna get up to the yellow line and get rejected and come down, then this is a leg for rejection downwards. If we are gonna lift and hold the 20 here, the midline of the Bollinger, then this is definitely consolidation to attack the previous peak and maybe do a local higher high. We still haven't got anywhere close to the pink line here, which is the previous peak formation, support and resistance. That would be the 30k for BTC, and I believe somewhere around the 2020 mark for ETH, but I'll have to double check for that. Now, I'm sorry, I'm just checking to see how XRP is doing, because I have a trade that I am looking at DCAing in on and possibly closing quite soon if it's not going to move past a certain level. Anyways, so with this in mind, just a general context, we have the news coming. The biggest item here is Powell speaking 3 p.m. UK time tomorrow and Wednesday. Then the DXY is fighting for support, trying to get support, whereas the S&P has the support. Now, where does that put our coins? Well, we have a scandal in the world of crypto with Silvergate at the moment and Binance. However, we don't have yet action like when Sam Bankman-Fried was arrested. That was action, legal action. Now, at the moment, I believe we still need some more legal news coming out with legal action against the world of crypto, and then we're gonna have a possible drop, sell-off, panic attack on the part of the long-term holders, because at the moment it's the long-term holders that are in, and then the market makers, and then the traders. So we haven't yet had that panic moment in this bear market. If something big comes out, I believe that panic moment will follow, especially after this rally, because again, people are or might be enticed at selling here after this lift, and also after seeing how low it could go. So it went from 3,600 to 900, lost, how much is that? 75%, let's say, of its value over the course of April to June, 2 months. Of course, they're going to be enticed here, seeing that what might happen is something along these lines. So they've seen what can happen, and that's why bear markets go in stages of three steps down, because after 2 steps where you had massive drops, people will be panic selling at the 3rd step down. Now, what do we have on the daily in terms of the RSI? Descending, dropping momentum. There's a little hook now, a little bit of a lift, which again, that's for ETH, sorry. I'm going to switch to Bitcoin. I don't know why I started with... with ETH, because they've both been quite regular, both BTC and ETH. So again, descending momentum after all this overbought space here. Like, look how far it got. I anticipate we'll be seeing some downwards action, some more downwards action. Now, there are, as you can see, around such peak times, there are moments where it can bounce up without reaching the bottom. So here it did it, here it did it, here it did it. So it has done it before, and it could do it again. The point I'm trying to make is we can't trade on the daily RSI because it could flick, so the ranges are huge. We have had, though, the crossing of the 20 and the 55 over the 12-hour. However, in terms of what's against the downward move is the stochastic. Now, because the daily is holding support of the 55. Volumes are decreasing severely on the daily. The stochastic on the daily is still down. However, The 4-hour is below its support. We are holding a support line on the 4-hour, but we are below the 20 EMA. We're not holding the 20 EMA. So I anticipate more downwards movement for the 4-hour time frame. If I'm looking at the 4-hour time frame in terms of steps, I see 1 step here, 2 step here. Could this be the 3rd step? Yes, it could. What do we need to see? We need to see another push down and then a rejection and a lift. That would be the confirmation that the 3 steps down, the three steps down are made. Now, until we see that, we are actually in this downwards movement scenario. The momentum on the 4-hour stochastic is down. We might be thinking, because we have done a local correction here, so we've done a 786 correction. Because we've done a local correction here, we might be thinking, and we're holding this support, the 22.3 support, we might be thinking that we're done, that we're going to reverse from here, which is a possible scenario. Now, I'm going to talk about 2 directions and what would validate or invalidate each of them. For the drop down, the validation would be breaking the 22.3 and breaking the previous low, and the target, the measured target, the most conservative target for that is the 19,700, and that would be in line with a 0.5 correction of the bigger swing on the daily, and that's where I'm planning on taking 50% of the profit. Now, so 22.3 and the breaking of the previous low at 21.8 would be my confirmations for or going lower. What would be the invalidation of the downward momentum and the confirmation of reversal? Breaking the 20 EMA on the daily, holding it, and also breaking the 22.8 support and resistance line. Now it is resistance, it hasn't been back tested. Breaking above it and keeping above it, to me, would be continuing to the upside. It's as simple as that, and I'm going to keep it as simple as that in my analysis, because we want to see a simple move. Could it keep dragging on and spilling? Yes, it could. We have descending volumes for that, and we have the stochastic on the 4-hour for that. However, we must be open to any sort of market manipulation to either side, especially to the upside, because again, there might be a lot of liquidity right now in short positions that the market makers will want to come for. So breaking the 20 EMA, holding it, breaking the 22.8 and holding it, to me, is we're changing direction, and then I would be looking for a golden pocket along that line to follow it up, sort of like what it did here, it's going to do on the other side, and it is a trade worth doing. Even if I catch it somewhere around here, up to here, it would be 10%, happy days. This would be a nice profit. So we won't be missing any move where we are right now if we're looking to the validation and invalidation levels and watching price action closely on the 4-hour. So we have plenty of time, because that would take at least 2 4-hour candles to confirm. So 8 hours, we still have plenty of time. However, at the moment, I believe that we are gonna come down a little bit further. I think we are gonna do that 0.5 correction of the greater wave. I am in a short. BTC was generous enough to give me an entry last night. There it is. It was the midnight wick here at the golden pocket, 22 at 480. Stop loss, I put it. Started with the 50% of the position, and I'm gonna DCA in after the start move of New York, because I anticipate New York will do another hit to the high and then continue lower. This is what I believe. I might not DCA. I might just take profit if I see the New York making a move down and not being able to break this wick here on the 1-hour time frame. So the 1-hour time frame will be my signal time frame, because the 1-hour is already printing a bottoming out pattern here that I'm mindful of. So again, I'm gonna be watching it. I might be closing it if I see that it's not going anywhere. So if it doesn't start heading down from where it is right now, getting rejected, and then making another maybe sideways move at New York time, I'll be quite mindful of my position. And I'd rather sit back and wait, because again, here we are in this space, still ranging. It is still ranging. It is the same glorious space we've been in for months now. It's January 20th, and 2 months almost. 20th of January, 20th of March next week, or in 2 weeks time. So 6 weeks of this ranging sideways. But this is it. This is the ranging market. Okay, I'm going to do the same for ETH. ETH on the daily is looking like it wants to push down some more. The 55 EMA is holding, and the 15 level is holding here as well, which is a local support and resistance. The RSI is coming down quite forcefully, and at the moment we have the MACD pushing down as well. So the daily would indicate momentum to the downside is continuing. 4 hourly is making a little bit more of a snappier move compared to Bitcoin, but again, it hasn't got above the 20 EMA yet. Now, we are still in the same ranging space. Like again, we might be caught in those ups and downs on the 1 hourly or the 15-minute time frame, but the overall, the zoom out picture, the bigger picture is we haven't left this ranging place. We haven't left it. So the question here is, as traders, is where are we going with this? Breaking the 15.15 or the 15.17 and the previous low here would mean correcting down further. Now, if we are to look at the 3 levels up that we have on the way up, we're going to put the fib on this. The 1330 is exactly the 702 of the swing. Could we go there? Absolutely, we could. That would be a nice healthy correction, and we could still continue to the upside from where we are. So until our daily level, until our daily trend doesn't get so what I'm trying to say is that we could be having these great trades up and down in this space, but we don't yet have the confirmation or invalidation of the bear market. So we're still in between. What's it gonna do? Is it gonna leave the bear market or not? Because it could come down. ETH could come down to 1330 and still lift from there, and that would be again a very technical move. But anyways, we'll cross that bridge when we get there, and we're going to talk about it when we get there. But at the moment, I'm looking at the 1550 for confirmation, because it breaks the previous low as well. So we're continuing lower to around 3030. In terms of invalidation, because ETH doesn't have that extra support and resistance line, it does have it, but it's too choppy to take it into account. So I'm just going to be using the EMAs on the 4 hour for validation and invalidation. And please do take this with a pinch of salt, and watch for any particular 4 hour RSI moves or stock RSI moves. They're very hard to read at the moment, so if you have the slightest doubt, you can wait, because there will be a move out of this range clearly when it breaks here to the upside, when it breaks here to the downside, and these would be really nice trades to make. Even if you're going to wait all the way up here for another leg up, that would be a 9% trade to make. Even if you wait here for another leg down, this would be a 12%. So I'm just showing you that these are going to be 4 hour moves, and even the 4 hour has been very, very choppy lately, which has decimated the trader. So you can hear it in my voice. I'm actually quite happy that I made profit through all of this. This is the choppiest part of the chart, and traders get attached to their positions, and they get trapped, and they might either get decimated on their stop losses because they're using too high percentage in their stop loss, or the opposite. They might start DCAing and loading up in these choppy times, and then price would just move the other way because the market makers know where their greater liquidity is. And here's where the market makers will follow the money depending on where more money is put in the chart, either to the upside or to the downside. That's where it's going to go. However, the TA will let us know which line will break first. So my point is, in this middle of the 4-hour range, we're in the middle of a 4-hour range, we're in the middle of the level 3 4-hour range between 1650 and 1520. You can wait until one edge of the 4-hour is hit, and if it gets hit to the top here at 1650 and we have a maxing out level on the stochastic and the RSI, and it looks like it's getting rejected, then shorting is the way down to 1330, and that would be a beautiful trade to make, about 20%. The opposite for the down, if we go to the down, the edge of this range, the 1520, and we don't manage to break the previous low and it looks like we're bottoming out here, then of course going long for another leg up would be the case. I am considering moving this line a little bit higher to include these two swings, 1, 2, 3, 4, and this line slightly higher to include this one on Friday. So again, 1, 2, 3, 4, 5, 6. If I don't take this into account, 1, 2, 3, 4, 5. So that would be a slight tweak that I can make today because of where we've stayed. So my point is, we are in the middle of a 4-hour range. If you've started a short position and you're looking to short, I believe that is the higher in probability option for now, but we need to see the breaking of the previous low. That's what we need to see. So be mindful of the short positions and be mindful of any bottoming out structure around the previous low, because if it doesn't manage to break the previous low, then we're looking at reversing temporarily to the upside. I'm not saying that we're going to reverse out of the bear market. I'm saying that we might reverse for another leg up just to get rejected and head down some more. So that's it for me. I will be posting updates as we go through the day. Because of what's going to happen tomorrow and Wednesday with Powell speaking, I believe we're going to see a ranging today, and we're going to see bigger moves tomorrow and the day after tomorrow. So that would be the moment to watch in the charts and to prepare for. But I will keep you updated if something happens. Thank you for today, and I'll see you guys